Welcome to my morning report. Charles Supposes on Monday, 30th of October, with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly sort of consolidatory start, really, to the markets. The equity markets are not really moving anywhere, but we do have a slight amount of dollar weakness. A little bit of dollar weakness creeping in since Friday, really, into the close on Friday. The dollar started to fall back, and it's sort of continued lower today. That's coming through Treasury yields, which have started to drop away. Certainly, the 10-year trading. Or 10-year yield trading around a 3-4 day low, and also the 2-year yield coming off as well. That's coming on suggestions that President Trump is sort of leaning towards Jay Powell being his pick for Fed chair, and he's sort of the continuity candidate, really. Not so hawkish, anywhere near as hawkish really as John Taylor, or certainly as John Taylor is perceived to be. Subsequently, we're seeing these treasury yields and the dollar coming off slightly, and that is impacting sort of across the major currencies, with the euro bouncing, sterling bouncing, and the yen slightly stronger as well. Although we do still see gold, which is mildly lower, and generally speaking, equity markets broadly flat, trading around very mixed levels, nothing really doing in terms of direction. That was sort of true of the case in the Asian session. Markets couldn't really carry on from the gains that they saw on Friday, with the S&P 500 again sort of pulling into new all-time highs. But the European session not really showing too much of strength on those equity markets, but certainly that dollar pullback is a little bit of a move that unwinds some of the strong gains that we saw last week. But at the moment, nothing yet to really suggest that this is a massive correction that is going to be seen. So yeah, fairly sort of quiet moves with a little bit of a dollar negative bias at the moment. Now, in terms of what we've got to look forward to today, now you've got the inflation data for the core PCE, and that is later this afternoon at 12:30. We've got the UK clocks change, so bear in mind that throughout this week the US data will be announced an hour earlier in Europe. And what we're looking out for is the core PCE, which is expected to be plus 0.1% higher on the month, and that is basically where it was last month at 1.3%. Now I can show you that chart. You can see core PCE has basically been falling throughout this year. The odd sort of month of sideways move, but falling throughout this year. Now, a move below 1.3 would not be that great for the dollar. But certainly the market is expecting core PCE to sort of start to bottom and perhaps even tick higher. So it'll be interesting to see how the data comes out this afternoon. So my chart of the day is Euro Yen. Now, Euro Yen has been a really interesting one because it's basically been fluctuating between 31.70 34.50, sort of this 280 pip band in the last, what was that, almost six or so weeks. And again, it sort of failed around the highs of that band, sharply lower Thursday, Friday, back towards the test this 31.70 level. Now that 31.70 level has held okay again. A little bit of a tick higher today, but you look at these momentum indicators, you sort of see the RSI into the low 40s, mid to low 40s. That tends not, or hasn't been seen since August, which was way before that range started. Also, you've seen the cross lower on the MACD lines, stochastics accelerating lower. So this all sort of points towards, I think, really pressure growing on that 31.70 level, and I think that's going to be the case. You've got resistance 32.35 up to 32.90, a couple of old pivot levels on this hourly chart, and I'd say that that is probably a bit of a near-term sell zone if you got it into that area and then it started to sort of find resistance again, because this is, I think, an unwinding move. As you can see on the hourly chart, the MACD lines are just unwinding back towards neutral again. RSI, if it starts to fall over around 50, 60 levels, maybe that again is another signal to suggest that this little near-term bounce has run out of steam, and it's time to sort of put pressure back on the 31.70 level again, because that is a key level near to medium term. If it breaks to the downside, you sort of target 280 pips of downside, and you're looking at sort of 29 figure area. on the and the near-term basis, which again would certainly suggest those September lows would come under pressure. That initial support of 130.60 would also obviously be in line. But this rising 55-hour moving average has been a basis of support. That comes in at 31.70 now. So again, breaking below that would be indicative of this sort of changing outlook for euro yen, and it would be a key move, I think, on a medium term basis if we did see a 31.70 broken. So that level of support is holding for now, but for how long, with these momentum indicators looking a little bit more as though they're sort of positioning towards the downside. So I wish you good luck in your trading, and I'll speak to you later. Thank you.